It has been a choppy year for North America's airline this year, but they've had help from that lower oil price. Meanwhile, though, consumers are still worried about the effect tariffs could have on the economy. Let's zero in particular on the U.S. aviation sector. Here we're joined by Stephen Trent, independent aviation specialist. Stephen, thanks very much indeed for joining us.
Thank you for having me, and happy holidays.
Happy holidays. Looking at the big U.S. carriers, I see they've had mixed fortunes. American Airlines is down this year. United Airlines stock is up. But can you generalize about the industry? Is it doing okay right now, the U.S. aviation companies?
Yeah, absolutely. And I would say when you look at the big three, Delta, United, American Airlines, we're actually bullish on the 2026 outlook. I would say of that trio, American Airlines potentially has the most exciting story. But I think a lot of this begins with the consumer. So I think you have to bifurcate the U.S. consumer between wealthier folks that are invested in the stock market and everybody else. So that former category, you still see very good demand, and you still see people that want good experiences on board. They don't want to be stuck in a cattle car. They want one of the big three. And that's why you see, basically the discount airlines all want to push premium, which I think is an uphill climb.
That's right. People, their whole model is not providing fancy added services. Yeah. The United, could just talk a bit about American, though, if you would. I know its stock has rallied lately, but it is still down this year, AAL shares. Why is that?
Yeah, great question. So you've actually seen a lot of broad chop in the space. So the year started really bumpy, a great deal of uncertainty and concern on tariffs. You actually, unfortunately, had a couple of very high-profile aviation accidents. None of this helped in terms of higher-end consumers and companies planning business travel for the year or even planning leisure travel. Mm-hmm. So we have seen some recovery in the stock, but when one looks at the equity market value, American looks mispriced versus Delta and United. It's still hovering around its pandemic-era equity market cap. That's in spite of the fact that we've seen a significant improvement in free cash flow. We've seen a significant deleveraging. And 2026, when we think about the potential for them to catch up from a unit revenue perspective, that, in my view, looks like a pretty exciting opportunity. So we think even today, American Airlines shares are oversold.
What about Delta? Anything in particular going for them? Any particular tailwinds for that company in 2026?
Yeah, look, so for all three of them, you have the consumer, oil prices down. And I think it's fascinating. You see a little bit of an uptick in oil on, the Venezuela stuff going on at the moment. But if one looks at oil over the last 2 decades, in real terms, oil's down substantially in real terms if we take that oil curve and adjust it to 2025 inflation. So if you're at Delta, you've got really fantastic hub at Hartsfield. You have a robust co-branded card program with American Express. And then you have very good premium, very good lounges. I think in Delta's case, however, they're a fantastic airline, but it's probably unlikely that good to very good results from them are going to surprise anybody. I think you're going to see kind of the opposite. In Americans' case, they have good to very good results come through, and I think there's a good chance that surprises the street.
What about Southwest? Of course, they were the original discounter, with their model of a very simple fleet of 737 aircraft. Stock has done okay this year, up about 23%.
Yeah, absolutely. So Southwest is an interesting case. So on a fundamental level, its forward PE is trading far above where it traded pre-pandemic. If we look at the stock from a pre-pandemic basis, it had very good EBIT to free cash flow conversion, basically doing about $3 billion in each bucket. Today, if one looks at Southwest EBIT to free cash flow conversion, it's actually a much poorer scenario in both cases. So if you look at Southwest latest 12-month cash flow from ops versus American Airlines has done more than double cash flow from ops that Southwest has. What investors are focused on Southwest case, they certainly have a really good balance sheet. They have a formidable activist shareholder behind them, which I think seems to be doing some things that are potentially beneficial. But I would argue a lot of that's priced in. I'm not so sure I'd be making a bullish call on Southwest for 2026 at these valuation levels, especially given the poor EBIT to free cash flow conversion they have today, where they've actually been burning cash.
One thing I have only really learned about lately is the vital importance of these co-branded credit cards to airlines, not just for building loyalty among passengers, but they're a crucial source of revenue as well.
100%. And when one looks at these co-branded card programs, I think you said it very well. Not only do you have remuneration on the income statement with the card program paying a royalty, for example, but much more importantly, from a free cash flow perspective, when one thinks about the working capital impact of that, the liability growth, because in most consumers' cases, people are generating miles in their credit cards. You know, not everybody today is spending all of their miles, for Christmas shopping. Mm-hmm. And the rate at which you can generate points and the rate at which you can redeem points are absolutely not the same. So what we've actually seen from the big three that, quite frankly, have by far the best co-branded card programs, we've actually seen this growth, this remuneration growth, actually go a long way in terms of de-risking the earnings streams. So American, for example, has its new program starting next month. We're kind of excited to see where they go with that one.
I can't remember where I read this, but the commentator was even claiming the airlines have now turned into credit card companies that fly on the side. I think that's probably going a bit far, but it is interesting how vital they've become.